Hey folks, welcome back to the channel where we break down the wild world of crypto and markets without the fluff. If you're new here, hit that subscribe button right now and turn on notifications so you don't miss out on these daily deep dives. Trust me, with what's happening in the markets, you'll want to stay locked in. Today, we're diving straight into one of the most talked about shifts in 2025. Bitcoin's rough stumble, while precious metals like gold and silver are absolutely crushing it, fueled by escalating geopolitical tensions and those classic debasement trades. This isn't just a blip, it's a massive signal for where money is flowing as we head into 2026. Let's unpack it step by step, and by the end, I'll share some key takeaways to keep your portfolio sharp. Stick around because I've got a special tip at the close that could change how you view your investments. First off, let's talk Bitcoin. As of right now, on December 27, 2025, BTC is hovering around $87,000, and it's been a tough ride lately. We're seeing it slip below that key 87K mark in early trading sessions, dragging down the broader crypto market with it. Remember how Bitcoin hit those all-time highs above $120,000 back in October? Yeah, that feels like ancient history now. It's down about 6% for the year overall, with a sharp 10% drop in recent weeks. Why the stumble? Well, it's not isolated. Crypto stocks are getting hammered too. Think about the miners. Companies like Marathon Digital, CleanSpark, and Riot are underperforming big time, even those pivoting to AI infrastructure. The market's thin during these holiday periods, and that massive $27 billion options expiry we just saw. It's injecting volatility like crazy. Investors are engaging in tax loss harvesting after that 30% pullback from highs, selling off to offset gains elsewhere. But here's where it gets interesting. While Bitcoin's struggling, traditional assets are thriving in ways that challenge the whole digital gold narrative. Gold is up a staggering 70% this year, trading at around $4,580 as we speak. Silver? Even wilder. It's shattered records, hitting $72 an ounce, with a 143% rally in 2025 alone. Platinum, copper, they're all surging to new highs. So, what's driving this metals mania? Two big forces, geopolitical tensions and debasement trades. Let's break down the geopolitics first. 2025 has been a pressure cooker. We've got ongoing conflicts in the Middle East, US-China trade tensions ramping up with new tariff threats, and now uncertainties around Venezuela under the Trump administration. These aren't abstract headlines. They're pushing investors towards safe haven assets. Gold and silver have historically been the go-to during times of uncertainty because they're tangible. They've stood the test of time through wars and crises. Think about it. Governments come and go, but gold's been a store of value for millennia. Right now, with fears of escalation, capital is flooding into metals. Silver's parabolic run? It's not just safe haven demand. Industrial uses in solar panels, electronics, and EVs are booming too, adding fuel to the fire. Now, layer on the debasement trades. This is where things get macro-level fascinating. Debasement basically means governments and central banks are diluting their currencies, printing money, running deficits, inflating away debt. Sound familiar? In 2025, we've seen M2 money supply projections ballooning, with $500 billion more by mid-2026. Investors are hedging against this by piling into assets that can't be printed at will. Gold and silver fit the bill perfectly. They're finite. They're hard money. Central banks have been stocking up on gold all year, adding to reserves as a buffer against dollar weakness. Bitcoin was supposed to be the digital version of this, right? The ultimate hedge against fiat debasement. But here's the plot twist. It's not behaving that way right now. Why isn't Bitcoin rallying alongside metals? That's the million-dollar question. Or should I say, the $87,000 question. Analysts are pointing out that BTC's digital gold thesis is cracking under pressure. In a high debasement risk-off environment, Bitcoin's down 6.18% while silver's up 152%. Research from this year shows gold and commodities as more consistent safe havens across shocks, while Bitcoin acts more like a high beta risk asset, tied to equities, thriving on liquidity and hype, but faltering when fear dominates. Remember the AI boom? Nvidia's up a third since January, but Bitcoin didn't catch that tailwind either. It's stuck in this 80k, 90k range, testing supports it hasn't consolidated much historically, just 28 days between 70k and 80k. This divergence is a wake-up call. If you're holding BTC thinking it's a pure inflation hedge, 2025's proving otherwise. Metals are winning the debasement narrative because they're seen as legitimate crisis plays. Bitcoin? It's still maturing. Great for growth phases, but in uncertainty, it's not automatically the first choice. That said, don't count it out. Cycles show BTC making fresh highs relative to money supply each time, and supports like the prior cycle high from March 2024 could hold. But for now, the market's voting with its wallet, metals over crypto. So, what does this mean for you as an investor? Stay with me here. This is where we turn insight into action. First, diversify. If geopolitics keep heating up, consider allocating to physical metals or ETFs. Gold's challenging 50-year resistance levels against US money supply. Silver's industrial edge makes it a dual play, safe haven plus growth. For crypto, watch that 80k support on BTC. If it breaks, we might see time below there to build base. But if you're bullish long-term, this dip could be a buying opportunity, especially with institutional wins like clearer regs. Think about your strategy. Are you in for the quick flips or the long haul? Debasement isn't going away. Projections show dollar weakness persisting into 2026, potentially surging gold and silver further. Bitcoin might catch up if liquidity returns, but don't bet the farm without hedges. And hey, if you're into mining stocks, look at those with AI pivots like Hut 8. They're volatile but could rebound. Wrapping this up, 2025's ending with a clear message. In times of tension and debasement, traditional hard assets are stealing the show from digital ones. Bitcoin's stumbling, metals are rallying. It's a tale of two trades. But markets evolve, and smart investors adapt. If this breakdown helped you, smash that like button. It really helps the algorithm push this to more people. Drop a comment below. Are you buying the dip on BTC, stacking silver, or sitting it out? Let's discuss. I'll reply to the top ones. And if you haven't yet, subscribe for more like this. Next video, we'll cover 2026 predictions. Oh, and check the description for my free guide on hedging strategies. Grab it now before markets move. Thanks for watching. Stay sharp out there.